Hello everybody. So a lot of people asking me, how to use the spreadsheet. Let me put the spreadsheet in the screen. You guys already noticed this is a database. That's a very simple database. What I do, I collect whole data and try to put intelligence. And then we can define what's, big players. When I say big players, it's not like dealers, makers. It's like, CTAs that have a lot of money, okay? Or even retail that have a lot of money, okay? So, I track out the orders. You guys already know that, you guys have access to the spreadsheet. And as soon I identify things, I put like my comments. So how I work with the database. Remember, the database is whole data. Everybody, the majority of people, hide unusual whales, shadow flow, whatever. And, make decisions based in what they print. That's not a good stuff. Why? Because we don't know what we have behind those orders, right? We really don't know why they buy into delta hedge. This is part of the structure, blah 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 blah. Because that I track only the index. First of all, only big players trade the index, the SPX. Retail usually trade as SPY, the ETF, because we need a lot of money to trade SPX, right? To buy one contract, you buying $400 million or selling $400 million. So you need money to be leveraged like that. Period. So now you guys understand why I track SPX. So let's see. Let's show you guys how I do. Okay. For example, for March 1, I put observation in every order that I saw. Usually when I see small orders, I really disregard those one, and I start to filter for the big orders. $800, $1 million, $5 million. When we don't have a book with big orders, I look for the most bigger orders and try to identify what this player did. Okay? For example, over here, March 1st, when I told you guys, I'm expecting a gap, 5 points open gap down, resistance 3965, there where makers wanna sell. Was yesterday, right? I saw a lot of people talking about like 4K to buy at 2,939, but the book shows us unwind at 3,965. How I identify that? First of all, I look the volume, right? I look the volume, and then I went to the book, check, price action, open interest, and implied volatility. So, of course that you will not see this anymore because it was yesterday. We don't have a book for this anymore. So when I saw those orders, I come to to my home broker and I start to check. For example, yesterday I told you guys about 3,900. Let's use today, for example. Let me open this one. You guys, you observe, for example, from the big orders that printed yesterday. So March 1st, from this black bold line up to down. So the biggest call orders was in the region between 4K and 450. That's the region that the entire Twitter was talking about. Even our group. So I separate big orders, the two bigger orders, more than $200,000, And then I start to check, the volume, how many contracts, the percent of the person of the contracts, for each orders, comparing the open interest that you have, we already have, and the price action. If you check for 4015, the guy, had the order at 3.08. Could you be sold? Looks like yes, or unwind. Since the same contract is negotiation 94% below the price that the cheddar flow print to us. You guys got it? And then, I check the volume, I check opening statics, I check, implied volatility, and I take a conclusion was or a short call or a unwind. Remember that time at 10:41, 42, the deltas spiked up. Market, closed the gap around this time. That's a good time to sell calls or to unwind. Market's going higher, call going higher, puts going down. Time to buy hedge, time to unwind longs. You guys understand? That's a very simple way, to make, not to make, but to understand the flow. To understand the flow. Some, that's also easy to see that it was a short straddle. Because, in the book, I saw, let me put the book here. I saw the spreads. For example, now I'm seeing some orders, but zero condition. Wasn't part of any structure. So somebody sold or somebody bought puts and calls. Okay? You guys understand? So I also check the book to try to identify during the day, if it was part of one structure or not. When I saw that it's part of the structure or the spread, usually the most common is a spread. They finance themselves through the market, selling calls, selling puts to buy calls, to buy a put, and vice versa, right? And then I take the notes that I was identifying. Okay, but basically the database is raw data. So I use the database to connect the puzzle pieces. Mainly implied volatility, opening status, volume, and price action. Guys, take care. Use the spreadsheet. Use the spreadsheet. As I have been telling you guys, my intention of the group is try to teach the knowledge that I have. I know that a lot of people usually come to the group and after 1 year left. That's what I want, because I want to make you guys confident, to try to identify the price action. That's the first point. The second point, try to teach you guys to not use the emotional in the investment. Because as you guys see, also every day in our group, people change sentiment from 0 to 100 in seconds. Just because market starts to go up, people all see the guy is a genius. And then price went down. Why? Because the setup was built couple days or in a day before. And this is what we try to identify through the raw data, the spreadsheet that you see in the screen right now, comparing with the book, using Greeks, implied volatility, volume, and price action. Okay? Thank you guys. See you guys soon. I hope I was helpful.